So ChatGPT is insane. This is a large language model based artificial intelligence that can write you a meal plan, create a blog post, draft a legal document for your next home purchase, and even tell you jokes. So the next rational line of human thought might be, holy is this thing gonna take my job? And so today I'm going to be asking ChatGPT the exact questions my clients asked via text message and email, and we are going to see how different my answers were from ChatGPT's answers. And we're gonna find out if I'm out of a job. Time to think like a language-based AI. Question number 1 comes in from a client via text message. Hi Josh, my total gross income for the year was $106,302, and the total income tax deducted was $25,905. An online tax calculator said that I owed $3,138 still. Should I put more money into an RSP to reduce this number? That's a great question. Let's see what ChatGPT has to say about this. So I fired up ChatGPT by saying, hi, it said, hello, how can I help you today? And I have just gone ahead and typed in this prompt. I made it, gave it the benefit of the doubt, said, hey, I live in British Columbia, that's where the client lives, and here's the information. Just so they know that we're coming from Canada, that would be unfair. And so I plopped this in, and let's see what ChatGPT has to say. An RRSP is a tax-sheltered savings plan that can help you save for retirement. One of the main benefits of the RRSP is the contributions to the plan are tax deductible, which can lower your taxable income and result in a lower overall tax bill. In general, the more you make. Okay, so what it appears that ChatGPT is doing so far is giving great information. It's actually doing a stellar job of kind of helping us understand what an RRSP is. It says this is impressive. It says, in your case, your marginal tax rate seems to be around 29% given your gross income and the tax deducted. According to the numbers you have provided, contributing to an RSP would likely lower your tax bill, but you should double check the numbers with a professional tax advisor or accountant to confirm that it makes sense for you to contribute to an RSP. Okay, so it's even found a way to pull the client's marginal tax bracket. That's really interesting. It's also worth considering that while an RSP contribution may lower your tax bill in the short term, it could also increase your tax bill in the long term. So ChatGPT is pretty smart here. When you withdraw the money from the plan during retirement, your marginal rate could be lower. Lastly, you should make sure you have a solid emergency fund in case it throws in some extra fun information. Super impressive. And so what it's done is it's found out the client's marginal tax rate. It's given us some information on what the RSP does. And this is all incredibly impressive. Now, when I think about what my answer was, let me read that off for you. I said, first things first, I clarified with the client that she's on track in terms of the concepts, right? I walked her through how, yes, she's right, the RSP would decrease her taxable income and thus reduce that balance owing. But I walked through with her to double check the numbers, and we found out that she had made some entry errors from her slips, and she also entered her taxes in the wrong jurisdiction. And so we realized that we actually didn't need to do any RSPs, but it would have been efficient to do it anyway, since her taxable income is actually quite a bit higher than it will be in future years and in retirement. I think the lesson here with this one is that the AI, no question, did a fantastic job of identifying a few things for us. But the big thing is it really depends on what you input, right? In this case, the client's real problem is that she wasn't able to input the information correctly because she didn't know where to pull data from. And so you can prompt the best AI in the world to solve your problem, but if you're asking it questions that don't apply to you, that could be painful. Here, the ChatGPT, incredible job. This client, not so great a job at actually finding out what she really needed to input and that sort of thing. Next question, and I'm gonna do the reverse. I'm actually going to answer first and have ChatGPT answer second. Hey Josh, if I were looking to buy a house in the next year or two, where would be the best place to save or invest that money? Great, good question. And so my answer to this was, okay, that depends on two big factors. Okay, let's think of two factors. First factor, do you want to be ready to buy at a moment's notice, or are you okay delaying the purchase if the financial timing isn't right? Big question. This will affect whether it makes sense to have any volatility in a portfolio or the savings or the investments at all. Second factor, 2, will the savings be done as a lump sum, one time up front, or will it be done as a contribution, what we call dollar cost averaging? The reason I ask that is because a lump sum would tilt us more towards something conservative because where we buy really matters, whereas continual monthly contributions, especially at a market low like we're in right now, is actually very advantageous for someone looking to buy in 1 or 2 years. And so these were the two big questions I was asking, trying to get some pre-qualifiers to determine, okay, qualitatively speaking, what the option might be for this client. What's the best option for them? And so at the end of the day, it turns out that this client was willing to delay the purchase if the financial timing wasn't right. They cared more about nailing the finances they did about getting the house. And secondly, it turns out they were going to be dollar cost averaging a large amount every month rather than actually doing a one-time lump sum. So as an aggressive young investor, I said, hey, given your situation, it actually might make sense given with where we are in the market, given your saving strategy, given the timeline and your willingness to delay. It actually looks like you might want to be more aggressive than just a savings account. And then we walk through some scenarios and some portfolios for them. Now, let's see what ChatGPT has to say about this. So I've gone ahead and I've prompted ChatGPT, and I'm going to hit send. When you are saving or investing money to buy a house, there are a few things to consider. The most important thing is to find a place where your money will be safe, where it can grow over time. Okay. One option you might consider is a high interest savings account. Okay, good. So it's listing out different options. I mean, obviously, I think it's not terrible advice to tell someone if you have a 1 or 2 year goal, opt for a high interest savings account. Another option is a tax-free savings account. This is our equivalent of a Roth IRA. By the way, when I was talking about RSPs in the previous example, that's the equivalent of an IRA or tax deductible retirement account. You can invest in bonds and GICs. You can invest in a TFSA. Finally, you might consider investing in stocks or equity funds. Okay, but these type of investments can be more volatile, and the value of your investment can go up and down depending on the performance. This can make them a riskier option for saving for a down payment on a house, as you might need to sell them at the wrong time. Very good, ChatGPT. And at the end, it does throw me a bone. It says, well, consult with the financial advisor professional to evaluate which options are best. And so what I might do is give ChatGPT the ultimate benefit of the doubt and assume we can prompt it with the right things. I'm going to say, I'm okay delaying the house purchase to watch my investments grow. Any advice? If you're comfortable delaying the house purchase to watch your investments grow, then you may want to consider having assets that have the potential for you to higher returns, such as stocks or equity funds. Okay, so I think what we're determining here, what I'm learning at least, is that the value of ChatGPT really depends on the quality of the prompts. And so that's got my mind spinning, right? It's got me thinking, okay, this could be massively valuable if you know how to prompt it. And so there's one argument where you could say, well, this is going to make advisors way more powerful because we can prompt it with the right things. And then there's one argument that says, well, if people can just learn to prompt it themselves, now that they can become their own advisors. But the reality is, we've seen this play out with the robo-investing craze. If anything, it just made advisors stronger. It actually didn't make them weaker. And what we found is that robo-advice kind of just took out the lowest segment of the market. It took out, those $1,000 accounts, the $5,000 accounts. Large wealth management clients still use advisors. And so I'm not trying to just defend the industry. I want to give you an honest assessment. And I think that, as in most things, the cream of the crop in terms of the advisors will rise to the top, and the people who are slacking off or not trying to constantly improve themselves or leverage the technology are probably slowly going to get filtered out. And by the way, if you don't want to be one of the people that slowly gets filtered out by ChatGPT, make sure to click the link in the description below where I can give you my free guide on how to leverage ChatGPT as a financial advisor. It's completely free. You just enter in your email, I'll send it off to your email, and you'll get all the things I've thought about and put together this resource to help you leverage this technology, not in the future, but like right now. And I hope to update that over time as more developments come out. But anyways, back to the video. Next client question comes via text message. Will I be able to set up a new tax-free first-time homebuyers account next year, or is that still an unknown? Let's have ChatGPT answer this one first. Okay, so this is where ChatGPT seems to maybe have made an error. It might not have integrated new information quick enough. In Canada, we have a program coming out that will allow you to make tax-deductible contributions into an account and then pull it out for your first-time home purchase with zero tax implications at all. It really shows you how much of a real estate bubble we have up here and how much our government is just trying to force feed people into the housing market. But the reality is, this is where a very simple question, I answered this, yes, but you could even set one up now. Even though it's not enforced yet, you can always contribute to an RSP and transfer it over later. That way you can get the deduction for this year's income tax and still get the benefit of the account when it is released by transferring into the new account. And so I had some understanding of the nuances of how this could work with someone now. ChatGPT got this one completely wrong. And so as the software gets better and better, I have no doubt it'll be able to spit out the answer to that one. But that might be another thing to consider, right? Is if there's new tax, if there's new investment, if there's new different regulations and rules coming out all the time, it's important that ChatGPT keep up with the latest things as they're released in real time. All right, last question. I had a client send me a text that said, can you please explain to me why you recommended financing a truck at 3% as my best option, as opposed to paying for the whole thing in cash? Is it smart to make a down payment, or is that dependent on what I'm comfortable with? And to that client, I said, here's my answer. Financing at 3% is the best decision for a couple reasons. First, you're a young investor with a really long time horizon towards your goals. It was a young guy, high earner investing towards retirement. You have high risk profile. This guy's like buying penny stocks, doing the Wall Street bet stuff on the side, and then he's got a very aggressive portfolio with me. And I said, you have plenty of tax-free contribution room left, and markets are down 20%. Lastly, you have a ton of excess cash flow. So you won't have trouble making the payments if you don't put an amount down. So cash flow doesn't bother you. In addition, we can conservatively probably get you 7 to 9% over the course of your career, tax-free on this money because you have room to do it. You're an aggressive investor. You're going to be doing it for a long time. And so here, if you're financing the truck at 3%, you're effectively gaining 5-6% by financing it, making payments, and taking that lump sum of cash and investing it. You're making the spread, the difference between those two interest rates. So it actually makes more sense for these clients to take on debt and finance the truck if they can lock it in for 7 years at 3%, which they did. To me, this seemed like a no-brainer, but people with internal bias towards hating debt, a lot of people would buy this truck with cash. And so let's see what ChatGPT has to say about this scenario. I have prompted ChatGPT and we will hit submit. Let's see what it says about this consumer finance decision when it comes to financing a vehicle or investing. Financing a truck at a low interest rate like 3% can be a good decision for several reasons. The first, it allows you to keep more on cash for other expenses or investments. Okay, so it nailed the framework that my mind went to. By financing a truck, you're able to spread the cost of the vehicle over a longer period of time, which can help you maintain positive cash flow and reduce, okay, this all makes sense. Another advantage of financing low interest rate is it can be better use of your money. If you're earning a higher return on your investments than the interest rate you're paying on a loan, then it can make more sense to keep your money invested and finance the truck. And so all of this is bang on in terms of the information. But here's the thing. I had to prompt it and say, can you tell me why this is the better decision, for it to tell me why it was a better decision? That's what a good computer does. I say, tell me this, it will tell you that, right? And so what we've effectively done is we've kind of come with some bias and say, explain why this is the best decision. If I had asked what is the better decision, it likely would have just weighed out the pros and cons for me, and it wouldn't have actually given me some sort of conclusion. And so I think the final thing we can learn here is the bias in the prompt will lead to a bias in the answer. And so I think we've gathered some really good information here. Some things like, the quality of the prompt and the data you enter really matters. Sometimes ChatGPT is flat out wrong and it doesn't have up-to-date information. And other times it actually does a fantastic job of giving us answers that we want to hear. Now, all in all, I'm incredibly impressed with the software. It is amazing how accurate the information is and how it articulates arguments in a concise way that allows you to maybe come to a conclusion on your own. What it doesn't do is that you can't hire it to make the conclusion for you. And ultimately, at the end of the day, I think that's a lot of what clients hire an advisor for. They're trying to say, can I pay for these answers? I want to pay money and have someone tell me what to do, put it in the right places, maximize my wealth, minimize the taxes, get me the best return on my investments, all these things. Given some information, I give you a fee, you do it. And so ChatGPT isn't there yet, but who knows? Maybe it gets there one day. All in all, guys, I'm super impressed. I hope you enjoyed this video. And again, if you want to get my system for how to leverage ChatGPT in your business, make sure to hit that link in the description below. You can opt in and we will send you right over that guide on how to leverage ChatGPT as a financial advisor. Thank you so much for watching this video, and we will see you in the next one.